All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great week wherever you are and whatever day it is for you. As always on the podcast, it is a Friday here and it is nice and sunny in Seattle. So we're loving it. Seattle, you know Seattle. Everybody hears about it. Always clouds, always rain. And that is 100% true all the way through pretty much now. And we're just getting our first peaks of sun. And I am just absolutely loving it. We did our grass last week. So it's a good day, but it's a good day for a second reason because we have Ricardo Johnson with us on the podcast. Ricardo is from Oasis, and they invest in luxury resort properties, specifically with technology, with tokenization. I'm not going to try to go further into it than that because Ricardo knows more about it than I do. But I'm super excited to jump into this. And also, Ricardo's from over the seas. This is an international guest. Ricardo's over there in Spain, originally from Great Britain, I believe. And so, Ricardo, thanks for hopping on.
No, thank you for having me, Gabe.
Absolutely. So I told you before we got on here, we always like to start with stories just to kind of hear how people got to where they are. Why don't you take us to the beginning of your story in real estate and tell us how you got here?
Great question. I suppose I feel like I started off at the bottom of real estate. So initially, I got into being an inventory clerk. So typically between, tenancies, you have someone that would go around, do a report on the actual, condition of the property, and they would use that to, I suppose, protect against the security deposit that's left on the property. And for me, that was probably the lowest barrier to entry to, get my feet wet in real estate. So
we all got to get started somewhere. So
yeah, exactly. And it was my sister who actually worked in an estate agent, and she told me about this opportunity, and I was like, okay, did a course, and started getting clients from local estate agents. But it allowed me, I suppose, to get comfortable around, collecting keys, dealing with agents, dealing with landlords, and I suppose that's really the first 6 to 18 months. That was really where my focus was.
And this was over in England, right? In Great Britain?
This is in the UK. Yeah, this is in the UK. Okay. And then around this time, this is when short-term rentals started to take off. And a friend of mine introduced me to, the opportunity. He had a cleaning company, and he was cleaning all these short-term rentals. He's like, there's actually a great opportunity here. So we sat down with someone, they gave us the rundown of how to set up a business, and we got the ball rolling essentially. So we set up a management agency. We started collecting clients, and then really, I think because of the buzz of the opportunity, it was pretty quick before we had a substantial portfolio that we were managing as short-term rentals. And
which city was this in?
This was in Birmingham. This is like the second biggest city in the UK. Mm-hmm. And yeah, it was just a wild time, going from like zero experience in real estate to now we have a huge portfolio that we're managing. And but I think it got the ball rolling in the right direction. Mm-hmm. So naturally from that, we started getting more, landlords who wanted to invest more into this industry. So using my connections and I suppose my expertise in managing, my job was to really go out there and find the best deals for them in the local area. So that's kind of where I started, learning how to negotiate, to secure these properties, finding the right deals, doing the due diligence and presenting them to investors. And that allowed us to continue to build in that way. This is just before COVID. So when COVID happened, and
I'm sure you got hit hard.
Shut everything down.
Yeah.
They blocked all the calendars, and we had to quickly repurpose those properties, which we was able to do, but it definitely was a hit on our income and on our business. And during that time, me and my business partner ended up parting ways, and it was a just difficult period in general. But one thing I could continue to do. They still allowed viewings on properties for a short period of time. So I was still going out there, finding deals, doing the paper analysis, got creative essentially, couldn't, get out there as much, couldn't really network as much, but I was able to hone in the skills of, finding these deals. And it was around this time when I personally started to get into crypto myself, started to invest, starting to learn about smart contracts, I suppose the main use cases for this technology. And I just kind of shelved it at the time. I had ideas, but I suppose didn't really have the skill set to really, take advantage of those ideas. And then it wasn't until I started noticing, where are the real opportunities? And obviously during the pandemic, there was really like a lot of uncertainty. So no one really knew, what was going to happen, over the long term. So people started selling off properties really cheaply. The interest rates came down so like a lot. So people started slowly, buying properties. And where I was looking to where the real opportunities were, they were all overseas. So a lot of places
I've heard, not meaning to jump into your story here, but I've heard the UK, like the purchase price for just a small unit there is just absurd. It's just through the roof. So pretty much throughout the entire country, it's difficult to buy a cash flowing, long-term rental out there.
Yeah, it's nowadays is a lot more difficult than it was, say, 5 years ago.
Yeah.
And that's just due to real interest rates, to be honest.
Yeah.
And they've been clamping down on, like in terms of their regulatory procedures, for like basically they're really just, favoring the tenants over the landlords. So just really squeezing out, especially the smaller landlords with like, 10 properties or less.
And do you guys have, so here in the United States, we kind of have, we call them blue and red states, blue states being Democratic, Democrat states, and they're kind of more tenant friendly. And then red states are Republican states and they're more landlord friendly. Do you guys have that same kind of dynamic in the UK, or is the entire country just, more tenant friendly?
Yeah, the entire country is, it's a small place, so it's easier to do, I suppose. But yeah, it's the entire country is just more tenant friendly.
Got it.
It's just a tricky market,
Yeah.
Unless you're quite creative and I suppose a professional investor.
Yeah.
But I think around this time, I started noticing where the real opportunities were. But there was a lot of investors didn't want to invest overseas. Most real estate investors don't really want, especially in the UK, don't want to invest, more than an hour outside of where they live, just for security purposes. If they ever need to, go over to the property to do anything, they want to be able to do so. So I suppose the overseas investments wasn't really, popular at that time. And then for the ones that, did want to, there's a lot of hurdles you have to jump through. You don't have the same access to finance and those things. You got the exchange rates, you got, all the legal regulations that you have to kind of navigate around, which are literally foreign to the everyday investor. So it was just, I suppose, a tricky time in general. But those are where the opportunities were. Those markets were booming, Places like, Dubai that had, over the last like 3-4 years, 70% in capital appreciation. You got places like Costa Rica. Are you serious?
That's insane. I did not know that.
Yeah, it's crazy. It's crazy. But I think during this time, people started to, when you had to work from home, people started to move to different countries. So if I'm going to be here, I might as well be in the sun at least.
Yeah.
So it started opening the doors to places like Bali, which are still increasing in popularity especially for digital nomads and these things. So
I've always been curious why Bali specifically for the digital, quote unquote digital nomad. Why that country and that area is so popular. I mean, there's so many countries that are in the Sun Belt and that have they have industrialization, they have access to internet. Why Bali specifically? Do you have any idea why that is?
I'm not 100% sure, but I would assume, like, I've been to places like Thailand, for example.
Yeah.
So that I suppose that region, like Indonesia, it's always been popular for nomads in general, like digital nomads in general. And so it kind of had that infrastructure already.
Yeah.
But because it's cheap, food's cheap, rent's cheap. And if you're, on a salary, exactly. If you're on a salary, like a Western salary, anywhere like South America or, Southeast Asia, those places are going to be, the best places to live if you can live anywhere, essentially. Yeah. But yes, so in regards to like where I am today, during this time, during the pandemic, I ended up, building a property management app. So I realized, okay, all these landlords, that don't have a huge enough portfolio and still want to manage the properties themselves, how could they do so, from an app? So I started to build that app out. It failed in the end, after a couple of years, it ended up failing. But that got my feet wet in regards to building a, technology platform, which, supported me in regards to, starting the company I have now, Oasis. Nice. So yeah, around this time, I realized that, some selling these opportunities, what we just call deals. We go out, find these deals, sell them on to an investor. They take them, they make the money, X, Y, and Z. I realized that there was still a pool of investors that didn't have access to this, this asset class. They didn't have 150,000, 200,000 to get involved in a project, but maybe they had 10,000, or 20,000, or even 5,000, for example. So I started, playing with tokenizing my deals using NFTs. So this is around about the NFT era, where I suppose the barriers were a bit lower in regards to, building out a tokenized platform or building out any sort of like Web3 project. And for a year, I ended up, building out a small portfolio, built out a small community of investors who were interacting with these deals using the tokens. So essentially, they'll buy into a particular deal. My company would manage it and then distribute those revenues on the blockchain to their wallets. So it was like a test, essentially, like an MVP. And
so real quick. So when you're talking about just distributing cash flow, that's different than how I traditionally understand tokenization of properties. So you're not, it's basically acting as a bank account, not as there is no like legal repercussions for the actual tokenization. You're not like distributing shares of this, equity of this platform or of the property.
In that version of it, no, there was no equity. It was just a right to the revenues that it generated.
Okay.
And for those opportunities, we didn't own those properties. We just controlled those properties. So I suppose in my mind, this was, one that we didn't own the property, so there was no security involved, essentially. But technically, it was an investment product. So, it was just a case of, trialing things out, essentially. With our project now, so what we learned a lot from, I suppose, that experience. And now we have, I suppose, a full, integrated platform where we have our own secondary marketplace for the trading of these tokens. All of our tokens are, registered securities. So they're all legally compliant, like investment products, essentially. And for these, we actually own the property as well. So how it works is we reserve a property within, a resort. So these are either like pre-construction or currently in construction. We reserve a few properties within that resort, and then we would crowdfund the actual acquisition of that property. Once that crowdfund is successful, we set up an SPV, which then holds those assets.
What's an SPV?
Sorry, a special purpose vehicle. So it's just a company entity which owns the actual assets themselves.
Yeah, like an LLC.
So exactly. So my company just has has an agreement with that company to manage those assets, essentially, but we don't actually own them. The investors own them directly. And then they use our platform to interact with the ownership so they can, buy and sell those tokens. And then all the revenues that's produced by that company is then distributed to those token holders. So it's just an easier way for them to get instant access to this, these type of deals, essentially all within one platform.
And so is this, again, going back to the equity thing, is this, are you buying and selling shares in the property?
Exactly, yeah.
And how does this work legally? So when I purchase property, if I do a syndication, for instance, I write up the syndicate, I have my lawyer draw up the documents, and in there it stipulates the percentage of equity given to the investors. And so when you're drawing up the legal docs, are you basically saying that the equity shares are going to be defined by the platform, or how does that work?
So you have the in real life side of things, and then you have the actual token side of things. So you have the actual shares from the company itself. So let's say we in this particular property, there's 10,000 shares, and then we represent those 10,000 shares by minting 10,000 tokens. So each token is one share, like for like, and that's how they're connected. Then
in the legal document, it's saying that the token, the ownership of the token is okay. I see it. Interesting.
Exactly. Okay. Then what happens is on the actual platform itself, there's a register of owners. So each person that invests, they have to complete KYC, which is know your customer, or the anti-money laundering checks. They have to be accredited investors as well because of how we actually register our tokens. So there is always an active register of the actual ownership of these tokens. So if there's 100 owners, the names are listed as those 100 owners and what holdings that they have at that time within their wallet. So anytime they're exchanged, that register is updated, and that's what I suppose they have ownership rights on the actual shares themselves.
Very cool. And so thinking of this from the investors, the general partner, the person out there going and doing a deal. Let's say I go out there, I buy mobile home parks, RV parks, and self-storage facilities. Let's say I go out there and I find a self-storage facility that's like $1 million. And I just set up a syndication to raise the capital for that. Can people invest in basically my projects prior to the property being identified? So let's say I haven't found this property yet, but I say I'm going out there, I'm finding a self-storage facility, I'm going to invest in it. If you're interested, here's you can invest here. And so they put in $100 or whatever into the tokenization platform. And then once I've identified the property, I can apply that 100 to the property. Or do you have to have already found the specific property for it to be, legal?
Legally, under these private offerings, you can I wouldn't say you can do what you want, but it's up to you as a general partner and how you want to structure, your deals or your opportunities. As a platform, we prefer to, have the actual, the opportunity there so that people could know what they're investing in at this particular time. However, in the space in general, let's say years back in the NFT space, people were raising capital for projects that they're going to build. So we're going to build this, this game, for example. People would then buy the tokens or invest in that project, and then they would use those funds to build the game. However, a lot of times, the founders didn't build the games, right? Or they weren't successful in launching the game, or whatever the case may be. But yeah, neither here or there. In our case, we actually, find the property first, secure that property. We have that relationship with the developer themselves. And then we actually present that to the investors, and then they essentially have the final say by committing their funds or not, essentially. So if we don't raise the money, then whoever did, invest, they'll get their money back. They'll get a refund. Well, that deal essentially gets scrapped, and then we'll find another one.
Very cool, man. I love it. I'm really excited for, just to see how technology, AI, tokenization, how all of that is going to be affecting real estate. And this is one example. It sounds like it's really solving a problem. So I love what you guys are building. This is a short podcast, so the time is running down. But before we move on to the quick question round, I do want to talk about the actual assets that you're buying. You talked about you like investing internationally in luxury properties. It's something even people here in the US, we like to buy properties down in Mexico, probably not Canada because Canada's cold, but we always like to invest south. So tell us, what do you look for in your properties? What do you look for in the country that you're investing in? And give us a little bit more detail on the criteria that you're looking and how you're finding these properties.
Yeah. So first of all, we go for the location that has great tourism rates. So places like Mexico, Tulum, always has great tourism rates. More specifically, growing, rates of tourism. So we can see that, over the next 5 to 10 years, because we're managing them as short-term rentals. So it's important that there's enough people going to that country that's going to sustain, this property. So that's one. After that, it's down to the developer itself. So we want to make sure.
So you only invest in new builds.
Yes, exactly.
Okay.
I suppose the reason for this is that we can actually lock in some actual upside during that development period. So buying off plan or pre-construction, we can actually get the property 20, sometimes 25%, even 30% below market value by the time they actually complete the construction. So for investors, especially if they're used to crypto type of yields, this is a great way for them to lock in that upside. So on the other side of that, it does pose a higher risk. So we have to do a lot more due diligence on the actual developer themselves. So how long they've been developing properties, we can go through all their past developments, how successful they were. They add contingencies of having a late delivery, but we want to see how many times that delivery was late, because that's going to gauge I suppose how successful they are, and we can actually gauge that for our investors for this particular deal, or what we can expect to see this in this one. Apart from that, we're looking at average nightly rates. We're looking at average occupancy rates in that particular area. We're looking for areas that's up and coming. So I suppose we're not the first development there, but this is an area where there's we've got other resorts being developed here. There's a lot of capital being deployed in this particular area that is going to see some sort of a boom in the short 5 to 10 years. How far it is from local amenities. So how far is it from the beach? How far is it from the nearest airport? So typically those are, I suppose, the main front end side of the actual the deal itself. Then there's actually negotiating. So getting a great deal on that purchase, because we're purchasing essentially at bulk, we typically can get a much better rate on what we're looking to invest in. We want to be able to lock in, depending on their rental schemes. Sometimes they do like a 60-40 split. Can we negotiate on that side of it, for example? I suppose, it's a long list of I suppose, criteria that we have to go through to secure these actual opportunities. On the plus side, there's a plethora of developments happening all over the world. So instead of being, let's say we were just located in, let's say Spain, for example, or Barcelona, for example, we're just locked into, what developments are happening here. So in terms of deal flow, it's a lot slower process. But having a global view, specifically locations that are they have I suppose some clarity over tokens and over crypto assets and those things, like that's also important. But more specifically, that there's a lot of developments happening. Space like Dubai is a great location. Places like Dominican Republic, places like Mexico, Costa Rica, as I mentioned before, like these locations that still nearby, like the US, which is the main market for this type of product, but still has a far higher upside than anywhere else in the world.
Yeah. Right on, man. Yeah, I've looked at Spain to buy a vacation rental just because I love that country, but it's surprising how much cheaper it is in Spain versus the US. I thought Spain being a nice sunny area, it'd be pretty expensive, but it's not. So, but cheap. I'm gonna take that opportunity. We have run down our time, so it's time to jump into the quick question round. Are you ready?
Yeah, ready.
All right. It starts with education. It could be any form. Could be a book you've read, a movie you've seen, a conference you've gone to, a mentorship program you've been a part of. I just need 2 recommendations: one for general life wisdom, and then one for real estate.
I would say for real estate, I suppose my favorite book there was The Art of the Deal from Donald Trump. It's probably predictable, but that opened my eyes to the type of deals and I suppose the deal structure and the type of conversations you have. It's a different style of book that I'm used to reading, but it's something that I've read maybe 10 years ago and probably read it 3 or 4 times. I just pick it up every now and again for inspiration overall. But it helps with negotiating and those things. Another book is Psycho Cybernetics. That's a book that I think changed my outlook. It's a very impactful book. But that talks about self-image and your own personal beliefs and how you look at yourself can dictate some of your behaviors because of those beliefs it locks in. So yeah, I think those two books are definitely game changers.
Cool. I love it. I have The Art of the Deal. I haven't read it yet, but I've actually heard
Really?
people say good things about it. Yeah.
It's a cool book.
What is the international opinion on the tariff thing that he's doing right now? Do people think that he's being crazy, screwing with the global markets, or what's the opinion out there?
I suppose, like, my personal opinion, I think it's an interesting play. It's something that, I saw a video that he's been speaking about this, 30 years ago. He spoke about tariffs and, I suppose, positioning the US, the way it's supposed to be positioned. I mean, on my side, I'm in the market, so it's not been great,
Stop screwing with stuff.
Exactly. But I think I do also like change. Sometimes you need to shake things up a bit. And yeah, it's not always going to be pleasant. It's going to be painful at the beginning, but I suppose the end goal is to obviously have a much better marketplace, but we'll see.
Yeah. See what happens. All right. Next question is for your younger self. Let's go back to the Ricardo who was just getting started. I can't remember what year you said, many years back as the estate agent. Go back to him, look him in the eye, give him one piece of advice moving forward.
I'll say be patient. I think getting into real estate is a long game. It's not a 5-year, get rich quick or anything like that. There's something that over the 20, 30 years, it's a lifelong career, really, real estate. So take your time and be patient. And obviously I didn't know, I suppose 8 years down the line, I'll be here doing what I'm doing now. But I think, you just never know where things can go in this game.
Yeah, 100%. Patience is also one of the harder virtues to, at least for me,
100%.
one of the harder virtues to exhibit. So that's definitely good advice for your younger self. All right, next question. This is usually about the US, but since you are over there in Barcelona, we're going to open it up to the entire world. It is a big place. There is a lot of opportunity out there. Give me the single metro, the single city area, larger metro that you're most excited about investing in today.
It's an area called Cap Cana in Punta Cana in Dominican Republic. It only recently come across my desk maybe 3-4 months ago. But from the research I've been doing, I mean, we've secured some developments there as well. But that's an area that I suppose I'm really excited about the prospects there. Yeah, it's like it's the exclusive part, the gated part of Punta Cana, which is, I suppose the most popular tourist destination there. So I look at that as some great upside overall.
Yeah,
something I'm excited about.
You were the first person. We've done, I don't know, 600 something episodes, and you're the first person to say anywhere in Dominican Republic. So that's
really,
yeah,
interesting.
But I do know a lot of people go down there to vacation, and it's a beautiful island. So yeah, interesting. All right, next question is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Great question. I suppose in general, I like to share deals in general. I think when you spend a few years, in real estate, you start building your network, and depending on what you specialize in, if you specialize in, land uplift or, mixed use, commercial real estate, whichever the case may be, people will start to call your phone when they have particular opportunities. And for me, that's where I've been able to take advantage the most. I think, especially being overseas, my skill is really negotiating. My skill is the due diligence to find, if it's a good deal or not. And I could do that from anywhere. So it helps to have a great network that keeps feeding me opportunities left, right, and center.
Perfect. I love it. So we're going to put relationships as that one. And that is a common answer and it's a good reason, because relationships are the number one thing in business, and specifically real estate, because it is a relationship business. So right on. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, many times things go wrong and we get to learn a lesson. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
I think it might be, typical for any type of like real estate investor, but finding the right contractor. And when you do find them, keep them happy and keep them on side. And that goes for cleaners, it goes for gardeners, it goes for general contractors, painters, anyone who you have to rely on to get the job done in a good time, at a good quality, and at a great price. Once you do find them, keep them on side because they are invaluable.
Yeah, 100%. Treat your people well because it is hard to find good ones. That's for sure. All right. That brings us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
You can find me on LinkedIn at Ricardo Johnson. You can find me on Instagram at Rico C. Johnson. That's probably where I'm most active. And if you just give me a DM and want to find out more about Oasis, I'm happy to jump on a call and give you the rundown on where we're at and what we're doing. You can also go to oasisglobal.io for the website. You can sign up there and join the waitlist, and one of the team will reach out to you.
Perfect. I will put those links in the show notes. So if you guys want to reach out to Ricardo, all you got to do is click the little more in the description. It'll pull down that full description. In there, you can find his link. All right, man. Perfect. That wraps it up. Thank you very much for hopping on the show.
No, thank you for having me, Gabe. It's been great.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.